Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to my weekly analysis video for March the 25th through March 29. Guys, it's going to be a really interesting week. We have the whole Brexit debate continuing on. The Prime Minister's asked for an extension to the 12th of April, which is like a 2-week extension. There was a huge march in London yesterday for people wanting the whole thing revoked. Don't think that's going to happen, but nonetheless, there is an absolute debacle. Today's newspapers are full of stories about the Prime Minister being overthrown by her own parliamentary cabinet. So it's going to be very, very interesting for the pound. On the other side of the coin, if we go and look at our weekly economic chart here, economic news, the only big story, there's little bits of news coming out about the German economy, etc. But the big news story for the week, as far as we are concerned, will be Reserve Bank of Australia. Governor Kent speaks. There's the one there I'm looking for. Reserve Bank of New Zealand interest rate decision, guys. So we'll get a direction on the New Zealand. What I've been looking for a few months now is a change in direction of the strength between the New Zealand and the Australian dollar, because it tends to run up and down, back and forward, guys, and it kind of ranges. And if you can catch the top of the bottom and get into a nice trade there and get it away from zero, you often can trade that for quite a few weeks or even months without worrying too much about it coming back to that top again. So you can put a nice little bit of cash in the bank, but it's about getting the timing right, getting the turn. And if we can get that turn, and this might be the catalyst, guys, if the market doesn't like what happens with this interest rate decision, we could well see the New Zealand dollar starting to fall, and that would be our opportunity to get into that. But we'll look at the chart in a moment. The other big story basically is that the world economy, let's go over to our flipboard here. America's next recession could start in Germany. Okay. That's obviously Theresa May could quit next week. That's what we were talking about there. Potential recession signal, a key yield curve has inverted. And that's an important thing, guys. The yield curve inverting always happens before a recession, but not every yield curve inversion leads to a recession. So it's just another indicator. It doesn't mean 100% this is what's going to happen. But we know that the world economy is slowing, guys. All you have to do is look at Reserve Bank's interest rates. And if you go and look at, I wrote them all down the other day. I should have had this in front of me actually for you. It was very, very interesting. The reason that I wrote it was that I wanted to do a news story on the reason why the dollar fell last week when the Fed made their announcement. And it shouldn't have fallen, to be quite honest. And as we saw, it made a recovery. Now, anyone who's been listening to me for any length of time, there's it there, guys. It was actually the bottom page. Anyone who's listened to me over any length of time will know that I'm either neutral in the dollar or I'm long in the dollar. Now, I've been persuaded a few times recently that maybe this is the turn, maybe it's starting to fall. But the dollar for the whole of this year has been in this, where do we start? There's December, guys, January. So basically, from about here across, which was August, from the end of summer last year, the dollar's been in a sideways movement, guys. This is DXY, the dollar currency index. And if you go right back to the start of 2018, I had a target up here for where I thought the dollar was going to get to. And we've moved quite far towards that. But then people started calling this as the top. Now, last week before, we hit that level again. Let's call it the level. Nearly called it the top there, but the top would mean that I thought it was the top. I don't necessarily think that's the top of the dollar. It could be, but certainly we're either going to be going sideways, guys, within this range. Remember, this is a 4-hour time scale. Or we could break out, push up, and from there we could maybe start to see it coming back down again. But something's going to have to give for that to happen, guys. And the reason I say that is if you look at the interest rates for the other currencies that make up this dollar index, the euro 0.00%, the yen 0.10%, minus, 0.10%, the pound 0.75%, the Swedish krona minus 0.25%, the CAD 1.75%, and the Swiss franc minus 0.75%, guys. Against that, the dollar's interest rate is 2.25%. Now, if you had a lot of high street banks and you wanted to put your money into something, guys, and I know it's not as simple as this, but I'm just using it as a little analogy. Which of those banks would you put your money into? Well, clearly the one that's giving you the highest interest rate, which is still a stable bank. Now, there are banks down the road that are a bit dodgy that will give you higher interest rates, for example, emerging markets. But then obviously those banks are very suspect in that if the world economy goes into recession, those banks could very, very easily lose your money for you. So the point is those used to be called the G10, and then Europe became the euro. So some of the countries in the G10 were absorbed into the euro. But basically every single country, guys, is in trying to stop a recession, trying to make their economies grow by making money available to the people that make the economy grow, by loaning money out to try and stimulate the economy. The US economy is doing pretty nicely, thank you, which is the reason why they have their interest rates so high, guys. Now, if we go into this and we look a little bit closer, we had this last week. Now, the whole way down here, I was saying, guys, I suspect this will break out and go long, or at least come back up to the top. But it kept coming down and down and down and down. When we got to here, we were looking on a 1-hour time scale. In fact, well, let's do that. We were looking at a divergence between there and there. And that's often an indicator that price is going to turn and go. So through this, I was saying, guys, this is going to go long, but be careful. Wait for the breakout, wait for the setup, and then trade it long. At no point did I see that coming. Now, I've put this in since. Remember, if you go back, that's what it looked like. We had a breakout and a little pullback, and I was saying, guys, this could well go long, given everything I just talked about. What happened? The Fed came out and they were dovish. But guys, they weren't saying we're going to cut interest rates. They were saying we're not going to increase them, maybe until into 2019 or 2020, or maybe once this year. That's what we're saying. The market reacted like that, and then they realized, or some of the smarter people in the market realized, hang on, this is still the best game in town, and the dollar started to climb again. So I am still, as I said, and I know this is a long way about going or saying this, guys, but it's important that you understand this and the reasons behind it. The dollar is not going short anytime soon. And when it is about to start going short, we'll see the signals in the news long before. We'll start to see news reports saying that this is looking good and that's looking good, etc. And then you'll start to see the dollar dropping. Now, I read somebody had called the dollar short, and the reason for calling the dollar short was, now I know that a lot of people out there are learning, but the reason for calling the dollar short was because President Trump wants a weaker dollar. Well, do you know what, guys? President Trump doesn't run the American economy. He may influence certain things, but he doesn't run the economy. The economy runs the economy, and the Fed reacts to what it sees within the economy. Okay, so that's the one thing. I suspect we'll see sideways movement within this range, within the dollar. I'm not going, I can't turn around and say, hey, yeah, definitely this is what it's going to do. That's why we go into our analysis on a daily basis down in the 1-hour time scale. But if you take it back out, Generally speaking, it's not going to change this pattern unless something happens that pushes it and breaks it out. At the moment, that arrow does not indicate, guys, that I think it's come to that price. That arrow was in there from a few weeks ago where I was saying that's the direction I think the dollar's going in. Now, can this be a pullback before we get that? Well, it can be. The only issue is, guys, it's quite impulsive. It's quite an impulsive move back up. So I wouldn't suddenly be saying, hey, listen, this is a correction of that. It can be, but there's your impulsive move, guys. This was corrective. That was the impulse. That was the impulse. That was the correction. You see the difference. That was relatively impulsive, but not as, look at that, guys. Okay, listen, I think we've made our case there. We'll go and we'll look at all of those in a moment. But the other thing that's, probably will offer potentially good trading, and I've been calling this chart for a long time, guys. We had our big correction. Remember, I called that for any of you who are with me for the last 6 months or maybe the last year or so. When this was going up, guys, I was saying we're coming into a double top. Be very careful. I shorted it from there and then got stopped out. And then this happened. And then I think I caught part of that. I caught it on the Aussie because obviously they all went the same direction. I caught it on the Aussie 200. But this correction then kicked in. When we were in this situation, I said, guys, this is a flat correction. We're going to need price to come down, break that bottom before it starts to go long again. That's what we got. What am I saying now? Well, this actually surprised me, as it surprised a lot of people, because we are going into a slowdown. The world economy is slowing down. Therefore, the odds of this breaking that top and continuing along at this point are very, very slim. Now, I said this 2 weeks ago. I said that this would have to correct at least, sorry guys, having trouble with the mouse here. This would have to at least give us a pullback before going long. And to be quite honest, I don't think that's the case. I think that the correction will stay, or price will stay in this correction for a long time. In other words, this is going to turn into a complex correction here, guys. Possibly a sideways correction. In other words, it'll move sideways within, some sort of range here. But I would expect it to come back towards this trend line before we're going to see any movement up. And that could take the rest of the year and maybe into next year, guys. If we hit a full-blown recession, then you could see these prices really dropping. So we could see this, we could see this coming down in that sort of manner, guys, or at least back and forward, something more of that order of nature. Why would that happen? World economies are slowing down, guys. And if you go and look at all of the charts now, anyone who watched the last one of these I did 2 weeks ago, I was calling this short, guys. Now, obviously, getting the timing of it right is the key to being a successful trader. But you've got to kind of get the tide right first. You've got to say a trend. You've got to say, hey, listen, this trend is petering out. This trend is ending. We're going to go into a new trend. And then as that trend develops, we decide, is it just a correction of the previous move? Or is this the start of a new trend, depending on the time scale that you're talking about? So that's on the daily still. Let's go down to the 4 hours. So we had a break with a push back up, and I'm just saying to the guys, listen, that's why we had the alarm line on there. Now, obviously, I've reset it since, but we're basically looking for a break of this, and we've had one. Guys, this is going to continue down. S&P, well, the S&P actually pushed up a little bit further than the Dow Jones did, but yet again, there was the alarm line that we had on last week, and it's gone off. We're starting a decline, guys. You can see where all the arrows were. I haven't actually cleaned this up since I did my last daily analysis that I do for my own traders, guys. There you go. There's it again on the French. The UK was a little bit different in that initially we had this sort of setup, and we were looking for this to go long based on the possibility that it was going to be a deal for Brexit, and that's what it did. And then this weekend has been a disaster because this was kind of moving against the trend of the rest, and then a bit of a disaster. The whole Brexit thing is becoming unstable again, and there you have the result of that one, guys. Listen, this could possibly. Brexit's one of those things, guys, that no one knows. Absolutely nobody knows what's going to come out of it. So the idea that I can actually predict what's going to happen is, it's just not happening, guys. The smartest people in the world couldn't tell you what's going to happen, or the most experienced people. Not about being smart so much. We're all smart. German, yep, we got the same pullback. I think the German and the CAC were getting that. They were getting that little boost off potential deal on Brexit because obviously they've been held back by it. And no, doesn't look good. The German economy is also slowing down, guys. So for me, this is the start of the pullback. And the Aussie, well, the Aussie hasn't fared too badly out of it. It's going sideways, but it will eventually drop, guys, with the rest of them. This isn't a particularly nice setup to try and get involved in something. These flat corrections are dangerous, guys, because often these flat corrections give you one more up and then off they go again. So, what happens to a lot of traders is they put an order down there to catch it as it's going, and it comes down, opens their order, goes back up. Of course, it stops just above there, and then it goes. Now, guys, that happens all of the time. It's got nothing to do with you. It's just how the market moves. And if you know about it, then you know when not to get involved and when to get involved. If you want to get involved in this, you would have to wait for it to make a bigger move and then see if you can get a half decent little pullback, some sort of little zigzag. And from there, as it falls, better place to get involved. Flat corrections are notoriously difficult to trade out of. Okay, so let's go back and have a look through the rest of the charts, guys. Those are the places I think you're going to find your best opportunities. The downside to this is that you'll need a pretty big account to stick to whatever your trading rules are with these, because the minimum deposit in these is $200. And if you're learning, you shouldn't really be in a position to trade these. But if you're trading with a bigger account, then fair enough. Go ahead. Right, so dollar. I put this on just to get an idea. It came down to 61.8. An awful lot of people swear by it. It works sometimes, guys, but it isn't the be-all and end-all. What I'm looking for there is a pullback to try and get into it short. We won't necessarily get the pullback. As you know, these things can just continue and run like that. If that's the case, then, if you're in from here, then that's fantastic. Get your stop to zero and let it run. If it comes back up, obviously you've lost nothing, so it doesn't matter. Don't worry about money that isn't yours. Worry about your own money. Protect your own capital. An open trade isn't your capital till the moment you close it, so don't be worrying about it. It's just an opportunity. You've got your line in, you've got a fish on the line, and you're trying to wheel it in, and it gets off the line. Forget about it, rebait your hook and get it out there again, guys. Don't beat yourself up about a zero trade. Now, if we get this, then I'll be looking to get into this short. If we don't get that, and it keeps going, I'll not be looking to get into it short. Pound. Guys, I'd leave the pound alone for the moment. The one thing I would say is, listen, initially when we had that last week, we were looking to pull back to here and then go. But given that what's happened this week, there's as much chance of the pound going short as there is of it going long. Now, given that we're expecting the dollar to go long, I would say that the possibility of this breaking out and dropping are pretty high. But yet again, you've got to wait for the setup before getting involved. Don't jump in there and think that that's it. Don't try and pick a top, because if you use that as a strategy, guys, more times than enough, it will push on up, take you out, and then it will do the thing that you thought it was going to do, but you're out of the trade. You've got to be patient, allow it to happen, find the setup, and let it go. You're looking for one setup out of all of these charts to get yourself into a trade. Don't look at every chart and see a setup and everything, but you'll lose your money. Aussie, same thing, guys. When it's peaked up here yet again, I thought that's overdone. That was the dollar peaking up, or the dollar dropping, should I say. And when it did that, it got to the top and started to come down, and I was so tempted to short this with a stop above there. And I said, no, you're long enough in the tooth to know that if you start trading like that, sometimes you'll get it right, but most times you'll get it wrong. Don't use that as a trading strategy, guys. You've got to have the patience to allow it to go, and then hopefully it gives you a setup. Didn't give us one, guys. Just kept running. Now we're looking for a setup. If it gets one, trade it short. If it just keeps running like this, leave it alone. Because at some point it will pull back, and it could pull back quite sharply, and then you'll be taken out. Only if you get a nice little setup like that do you try and trade it down. You've determined the direction. Now you need the setup, guys. Don't chase price. Wait for your trap to spring, and if it doesn't spring, leave it alone. Same thing. You can see where my alarm is, guys. I'm looking for a nice little pullback like that to get into that. If I don't get it, I'll not be trading it. CAD, same thing in the opposite direction. Looking for a nice pullback along, obviously these things move, guys. Perhaps it will look more like that. It is petering out. If you go and look at your MACD, that's actually not. I'm actually in this trade from here, so I'm hoping it doesn't come back down too much. Hoping it gives me a bit more room so I can get my stop to zero. That's the typical thing that I look for when I'm looking for a trade, guys. You look for a breakout of your trend, then you look for a setup. Why do you wait for all of that? Because that is the thing that will give you a high probability that price is going to continue in the direction that it's been going in. And unless you have that high probability, then you're just chasing price, guys. You'll get away with it sometimes, and you might go into a trade with a high leverage and pile a lot of your account into it, and you'll get away with it, and you'll make 20 or 30 or 40% in one trade, position size, not of your whole account. If you're trying to win 40% on one trade of your account size, you will, luck will catch up with you and you'll blow your account, guys. So I hope none of you are trying to trade like that. So what we're looking for here, if you're not already in it, wait for a pullback, wait for a setup. That wasn't ideal, but given the impulsive move of it, I took the chance on it, guys. Swiss, same thing, guys. Breakout, there was a little opportunity to get into it on a smaller time scale. Remember, we're in a 4-hour time scale here. We're looking for the same thing. It looks like it's reached its crescendo. It's going to correct back down. Looks for it to go long. And if it doesn't go long, guys, leave it alone. Simple as that. Don't risk your money. If it starts going short, don't suddenly say, oh, I'm going short on it. Okay. If it goes in the opposite direction, leave it alone until we establish what the new trend is, and then you look for a setup. Same thing, obviously you can see there that I was talking on Friday, that must have been just saying, guys, listen, what we were looking for is a breakout and a pullback. You prefer the breakout to be on the other side of your trend line. At the moment, it's not doing that. It's had a push up. Is this the pullback before it goes? That's why I've got an alarm on there and an alarm on there. I must have put that one on secondary because I already had one. Now, not all charts are going to move in the direction of DXY. Why would this one move in any other direction Well, guys, there is a possibility with this one that it would go that way, but then you're trading strength against strength. You don't want to do that, guys. You want to trade strength against weakness or weakness against strength, because that's where you're going to get your best move. Why would this one go down when the dollar's going long? Well, the Swiss franc is what we call a safe haven. And we had been coming down like this. And I was saying, guys, we're looking for this to break out of this trend and start to go long. What I actually drew with this last week was the possibility. Now, we're not going to get in to go, is that a 1, 2, 3? Is it, we're not doing that, guys. We're just looking at the big structure and we're going, is that going to give us an ABC on a lot higher time scale? And remember, the C could also turn into something much bigger, guys. It doesn't have to just come break that and then go short. But given that had come back down into that same region, what I was looking for was a break, a correction, and then we'll start to call it long. That seems to be what we have. Why did that come in? Safe haven, guys. Their interest rate on the Swiss franc is minus 0.75%, but it's safe. And when people are selling up their shares because they want to get out of the market, they've got to put the money somewhere. Where are you going to put it? Well, let's divide it out. Let's go safe with the yen. Let's go safe with the Swiss. Let's go safe with gold. Let's go safe maybe with the dollar, because you're getting a return on it. But just in case it collapses, let's go safe. That's why these start to move, guys. So that's what we were looking for. That's what we've got. And that is the reason why, despite the fact that we're calling DXY long, that particular chart looks short. I wouldn't trade it for the reasons that we just gave you. US, China. Now, this is one I got into a few weeks ago, guys. I got into a break of that. It was the first time in my life I'd ever traded the Chinese yuan. The reason I got into it was that I was expecting the dollar to go long. We had been in this channel for a long time, and I was saying, is this the bottom? Are we going to break out and start moving back up again? And I thought it's worth getting involved. Unfortunately, I got my stop to zero too quickly, and I got stopped out before it pushed up. As it was, I would have been stopped out again anyway, guys. So I just protected my capital. We're back down to zero, and then off it's gone again. I suspect we'll get a pullback and a breakout. That's what we're looking for. If we don't get it, we leave it alone. And we reassess again. US dollar against the Japanese yen. Why has this pulled back? For the same reason that the Swiss franc has taken off, guys. Remember, any of you who are with me for a long time, we went through all of this, and the whole way down here, I was saying, guys, when this is finished, we're looking for it to go long. When it's finished, we're looking for it to go long. We got a few false hopes. Eventually, it bounced along, and then eventually gave us that massive push out. And then we get a correction off it, and now it's going again. What do we look for? When you're getting a correction coming down or a trend like that, when you're looking to get into the change of direction, you look for the breakout, you wait for a correction of the initial breakout, and then you trade from there. 1, 2, third wave will always give you your best returns, guys. And remember, we don't know that it's a third wave, but whenever we get a setup that looks like that, we can kind of trade it and say, hey, this is a risk worth taking. Because if this turns out to be the third wave, it should be at least as long as that, which means it should come up to there at least. And usually they're much larger than the first wave, guys. So I would expect the yen to go in that direction, despite the fact that their interest rate is minus 0.1%. Rush to safety, guys. Now, none of these things may happen, but they're the things that I've been calling for quite a few weeks, if not months. Where was this? This was March, a year, guys. The whole way down here, I've been saying, guys, this is going to break and go long. So that's how long I've been calling this long. Not calling it long, but saying this is what we were looking for. We're looking for this correction to finish and then break out. Okay, so that's the reason that that's falling. But yet again, the same as what I said with the Swiss, against the dollar, you're betting against yourself because the dollar's going long. So you're swimming against the current. Swim with the current, you'll go a lot faster, guys. So in other words, yeah, look for trades on the yen, long trades on the yen, but not against the dollar. Look for long trades on the Swiss, but not against the dollar, because we're looking for long in the dollar, guys. Ruble, another one that I've never traded, but we keep an eye on it. Obviously, different traders have different strategies, so I have to cover everything, guys. So yet again, we're looking for the breakout the whole way down here. I was saying, guys, this is going to break out. We've had a breakout. What do we look for next? Look for a setup, guys. And then look for to see if it's going to do that. It could end up bouncing along, but we can't predict that, guys. All we can do is say that's a high probability situation. We've had a breakout. Let's see if we can get into the trade. Remember, you don't trade all of these. No, that's happened yesterday. Obviously, yesterday morning, we were here and I was saying we're looking to see if we can get a pullback to get into it. Didn't get it, guys. Off it went. Listen, if you were in a trade long there, fantastic, guys. That little move there could well have put a substantial amount of money into your account. What I would do now is just take the money. Why? Because there's a 90% probability that this will do that before continuing long. So, yeah, we're depending where you get in. Get your stop to zero. You could either ride through it in the hope that it's going to continue to go long, or you can take the profit, wait for it to come back down, see if you can get back into it again. But clearly, don't be trying to trade it short, guys. Don't be jumping into that. That's called catching daggers. Catching falling daggers, I think, is the term that they use for it. Where something shot away up, and then people go, "Oh, there's the top. It's going to crash back down again. I'm going to ride it down," and invariably, it does that. You start getting into the profit, and then it does that, guys. I tried that. Anything you can think of, I've tried. Once you've been in this game long enough, guys, you've tried everything. South African Rand. Now, there's my arrow. When we were coming down, I kept saying, guys, we're looking for this to go long. We're looking for the turn. We're looking for it to break out and start to go long. That's what we've had. I would have preferred this to be a little bit longer and a little bit more impulsive to make it obvious what it is. Is it a 1, excuse, is it a 1, 2, 3, 4, 5 that you could with a lot of confidence trade? But unfortunately, that wave there, number one, is a 3-wave structure. And number 2, it isn't long enough to be a 3rd wave. So we can discount that, which makes me then worry, is this a 3-wave structure that's about to break and come back down again? Like that. Up, back, bump, down. Up, back, down, bump. Leave this one alone, guys, because it's direction. Yet again, if the dollar's going long and this starts going short, you're swimming against the tide. If you think the Rand's going to do that, and why would the Rand strengthen up? Gold price is going up, guys. Very commodity driven, the Rand. They're one of the major, used to be the biggest producer of gold in the world. I'm not sure that they still are, but they're certainly one of the major producers of gold in the world. And if the gold price is going up, the Rand will go with it, guys. Talking of which, let's look at the gold price. The gold price is creeping up. What we said last week was to be careful because we'd had that. And I said, just be careful because from here, I'd been looking for another wave down. We didn't get it. It looks like a bit of an elongated 3-wave structure. But the whole thing could be a correction that's not finished. It started to come up, but it's not coming up impulsively. It's coming up correctively, which means we could get a pullback and then a push up, guys. You've just got to protect yourself with that one. I would not be jumping in long or short on this at the minute until you get something that looks a little bit more tradable. Here we had a push up, a pullback, a push up, a pullback, a push up, a pullback, push up. That was nice sawtooth movement, guys. That's not what this is at the moment. And by the way, this, for anyone who wasn't with us 2 weeks ago, I shorted this twice and I got stopped out on 16. Oh, not gold, sorry, silver. I don't trade gold, trade silver. But the two charts are very, very similar in how they look. I traded this up twice, up here and up here. Can't remember, but back down there. I think I got stopped out down there. Traded up nicely there and there. Got out at very close to the top of this. Waited for that pullback and then thought, well, this is going to go. Started trading it short. 1600, here it was, guys, in here. On a lower time scale, found my entry. The reason I'm telling you this is there's twofold. Number one is be aware that it happens. And number two, realize it's not personal. It just happens, guys. Listen, I had my stop on 1608. Yeah, around there somewhere. And my entry was here. And the reason my stop was pushed to 1608 is because when I had it there, I was stopped out. Even though the chart didn't get up to there, there was a large volume. When there's a large volume, your broker will protect itself by increasing the spread. And I got caught out in the increase in spread. Nasty, 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 guys. So when it happened, I licked my wounds for a day and then I said, but it's still going down. So I get into it again. And this time I put my stop at 1608. I was getting in at a lower down. And yet again, one of those spikes spiked up, stopped me out, and then price did that. That would have been my trade of this year so far. Would have been the best trade that I'd caught this year because it was in it on a nice, at a nice setup with it. And I certainly would have made, 6-7% on that, the way that I trade, and got stopped out, guys. The important thing is, from a psychological point of view, forget about it. Forget about it. Leave it alone for a while, trade other things, and then come back to it again. And that's what I've done. I haven't touched it again since. At the moment, this is looking as though it could well push on down, making this an ABC, guys, before we start to get a recovery. But I still have a long-term view on this, that this is going to break out of that trend and it's going to push up here. Why? World economy slowing, guys. The same reason that the yen's going up, the Swiss is going up, the dollar's staying strong, and this will continue to go up, guys. But you need to get into it the right price in the right way. Get it away from zero. Get your stop to zero. Don't lose any money. And then hope that it moves in such a way that you manage to get in down here somewhere. If it goes from here, then you're going to need to see some sort of push up, a correction. And maybe in a week or two, I'll be saying, hey guys, this is a great setup. Let's go. If it drops down here, then we'll get a trend line on there. And we'll be looking for a breakout off it, set up, and then we look to trade it long. If neither of those things happen, then we reassess. We say, hey guys, the world economy is suddenly not slowing and this is going down. That's not going to happen. Okay. Oil. Now, oil should do the opposite. I've been looking for the break short of oil. From here, I was looking to trade it short. Then it pushed up again, and I had an arrow on here. I must have cleaned it off on Friday. I had it when this started to break here. I basically said, guys, from up here somewhere, this is going to finish, and it's going to drop. Now, we don't know if this is actually where it's going to drop from, but there's a high probability it's broken. If you can see a setup there to get short on oil, I would do it. Does it mean that it will definitely go down? No, it doesn't. But if the world economy is slowing down, oil demand will slow down and the price will drop along with it. Now, obviously, it's artificially, the price is artificially controlled by OPEC because they can turn the taps on and turn the taps off, but they don't like it when it gets too high because it's bad for the world economy. And also, when the price gets too high, then all of that shaling and all of the other oil sands and all that sort of thing become productive again, and then that starts flooding the market. So OPEC like to control the level at a point where it keeps oil sands uneconomical and fracking uneconomical, and that's what they're trying to do, guys. So I would say when we came down here, I said we'll get a pullback and a drop. And in actual fact, that structure there looks very, very similar. And I don't know if I spoke to you guys about it or not, but I did definitely speak to my traders. And we're talking structure analysis here, guys. If you take that and you copy that pattern, you've had an impulsive move down, and then you have a correction of that impulse. Let's copy those. Where were we? Oil. Now, it's a different time scale because the other one's over a couple of years. This is only a few months. We'll have to adjust it. Oh, sorry, I need to paste it. Look at the similarity, guys, between what the dollar's done. And I remember that hasn't happened because of dollar price, because on this scale, that would only be the last few months, guys. Okay. But the structure is similar. It's a correction of the previous impulsive move down. So can you see how the structures, you can start, when you've been trading long enough, you start to see structures that you've seen before, and you know what they then go on to do. So having a look at that, I know I'm calling oil short, but there's the possibility that it will just go sideways for a while as the dollar's done, and then go short. But I would be calling it short. I wouldn't be calling it long. Can it go long? Certainly. Can do whatever it wants. Let's get this back to the 4 hours, and then we'll quickly go through euro. We don't want this being too long. Euro. Now, generally speaking, the euros will all be the opposite to the dollar, because if the dollar's going long, it's using an indication that the euro's going short. In this situation, I would leave this alone because of the euro's weakening and the New Zealand's weakening, although we are getting that interest rate decision. But I suspect the New Zealand will drop. But we don't know. We wait for the news to come out. We see what the chart does, and then we decide what we're going to do with it. So if we don't know, we leave it alone. At the moment, it's kind of bouncing along here. It's been coming down. It's going sideways. It could turn and start going up, particularly if the New Zealand weakens, but there's nothing to look at there yet, guys. And it'll be the same with the Oz. Well, it's not exactly the same, as that structure is different. But I was looking to see if this would break out. We've had a breakout. The Oz, ooh. Guys, I would leave that alone because it's just going sideways. It could come further down there, but you'd have to find a setup for it. And I'm not that keen because if you look at that, I don't trade levels. Levels exist, but not for me to trade. We trade structure. So because it comes to there doesn't mean it's going to go back up, but sometimes it does. But there are lots of places like there, for example, where you could say, well, that's a level. Well, it didn't work there, it didn't work there, it didn't work there, it didn't work there, it didn't. So don't be trading levels, guys, because they don't work most of the time. And if you use it as a strategy, then most of the time you won't make any money. Okay, so that's my opinion on levels. They exist, but don't rely on them for entry points. That's the point I'm making. Okay, EuroCAD. Is that a double top and it's about to start coming down? Don't like that one at the minute, guys. Leave it alone. Okay, there's your yen, guys. And we had that push down, a pullback, and now we've gone again. What you've got to do now is wait for another little rest period. If you jump into this, it could go, but the chances are it's going to rest. That's what we were looking for the other day. We were looking for a pullback to get short. It just kept going. We've looked at the reasons why that's going to happen, because we're looking for long trades on the yen. So it's a case now of finding a setup, guys. We'll put that there. That, I don't know, maybe we leave that over there and we start to look at this as a new trend on the way down there. Turkey's obviously had problems. I'm not aware of what that is, because it must have happened on Friday afternoon, guys. I don't really keep up with the Turkish lira, but clearly something's happened with the Turkish lira, and we've had this huge spike up. Last year we had this happen, and then there where that is, they increased their interest rate to 24%, and as a result you got this. And here I basically said, listen guys, this is yet again, it's one of those structures. You see it in Bitcoin, you see it in gold, you'll see it in silver on different time scales. But where you get that, will be followed by that. And then it'll start to look for its true value. Doesn't mean it's going right back up there, guys. Just means it starts to look for its true value, and then you'll maybe get a few years of sideways movement at where it should be. But there are opportunities when you see something like that. If you've missed that bit, then you can either trade it down or you wait for it to get to its bottom and start to come up. That same structure, you want to go back to silver, I'll show you it in silver on a, let's make it a 2-day time scale. There's the same structure, guys. Tick off. Now remember, it's 2 days now rather than a few hours. Came back down. This is the reason that I'm looking to get back into silver. There's your bottom. It should rise and find a place up there somewhere, a zone up there that's its true value. It's undervalued at the moment for me. And this year we'll see it starting to crawl back up. Where's the best place to get into something? At the bottom. Okay. And you can do the same for gold. You do it for Bitcoin. I don't have a Bitcoin chart because I have absolutely no belief in cryptocurrencies. Okay, there's the push up. There's the correction back down. Here's it going sideways. Where's it going to go? Up there somewhere. It could get back to the top, but I doubt that unless we get a major recession, guys. That's not going to happen. But it could certainly come up into these sort of levels, 1600 or thereabouts. All right, let's get on with it. Where were we? Pound Turkey, pound Swiss, or sorry, Euro Swiss. Let's get back down to the 4-hour time scale. And there's the strength of the Swiss coming in, that push on the Swiss, guys. I don't particularly like trading this one because they tend to go back and forward, and it's very, very difficult to catch. Now and again, you'll get a big push, but you'll need to have been trading it to catch that. You see that structure there, guys? That's the one that I often say, just that structure on its own, that little structure. Where you've had a push up and you get something like that, 9 times out of 10, it's a continuation structure. It tells you price is going to go in that way. But 1 in 9 or 1 in 10 or 2 in 10 maybe, it'll do that and then it'll drop out the bottom. They're very, very difficult to get into, guys, because the whole time that that's happening, you're looking for that. Very difficult to catch. When that happens, the best you can do is wait for it to pull back, give you a setup, and then trade it down, which is what you're going to have to do here. You're going to have to wait for a pullback and then trade it down if you want to trade it. Pound, guys, So when it came back down last week, I said it'll come back down in the trend, it'll take off. Yeah, that's what it's done. I'm going to take that arrow off now, guys. I no longer know. You can look at this structure and you can say, oh, it's going to do that and that. But this isn't normal circumstances, guys. This could very easily start to do that. Now, why would it do that and why would it not do that? Sometimes bad news is good news. Sometimes when something doesn't happen, it's good news as opposed to bad news, depending on what direction you're trying to trade, of course. The turmoil at the moment could turn out to be something that the market likes, because if Theresa May gets overthrown, then the idea that there's going to be a no-deal Brexit may or may not become more or less. Do you see why I don't want to pick a direction, guys? Could become more or less, probable. So, if Theresa May gets thrown out of her position, the market may say she was the block to the system. Therefore, we like this and start to push long, guys. But the opposite could also be true. I would just leave the pound alone for the next few weeks, guys. Just keep it, watching it. And if we get an idea of what's going on, then fantastic. There's the push down on the Swiss. See the difference between the Oz and the Swiss? We had that and then a recovery, but it didn't break out of the channel. This time, if we're going to call that the channel, I haven't got a top line to it. It's broken out of the channel. It's broken that previous low, guys. And this looks to me like it's getting ready to do that. Is that a setup? I'd be very wary of jumping in there, guys. Wait for it to pull back, wait for a setup, and then look to trade it down if you want to do it. The same with the euro, guys. There's that same structure where it looks like it's going to go long and then it drops out the bottom of it. It's recovered again, but I suspect it's going to do something like that. Yen, same thing, guys. The yen didn't even allow it to recover. I suspect we're going to get a downside to it. I don't know if I'm going to trade any of these or not, guys. The CAD, because the CAD's weak, it's come back up against it, but I suspect it will go sideways and then it will drop. New Zealand, a little bit of strength in New Zealand, a little bit more than the Aussie, I think. Yeah, a little bit more than the Aussie. So that's Aussie euro. Aussie. Ooh, pretty similar. Sorry, folks. I would suspect this of petering out and then starting to drop again. You've got to get the setup, but guys, and it's not there at the moment. South African Rand, yet again, because the Rand's pretty weak, it pushed back up against it. But I suspect we're going to be going sideways here. Aussie New Zealand, this is the one I've been trying to get long in. Reason for anyone who hasn't watched me before, the reason I'm trying to get long is because of the way that this pair moves. It sawtooths back and forward and back and forward, back and forward, back and forward and back and forward. Guys, okay, I don't know if that structure line's correct or not, but if you can catch it at the bottom, at the turn, remembering this is on a daily at the moment, and it's difficult to see an opportunity on a daily time scale. Way back there, what year was that? That was December 16, 2.5 years ago, near enough, guys. I was calling this long, and I remember trying to trade through this and getting stopped out again because it came back down, then off it went. Came back down, then off it went. Came back down, then off it went. Come back down. Where's it going to go next? It's going to go long again, guys. When's it going to go long? That's what we don't know. But if we can catch it on the turn, and I don't mean picking the bottom and whatever, but catch it as in if and when this breaks out and gives us a setup, remember this is a 4-hour time scale, and we get into it, and that's the one that goes, and then it does whatever it does, and you've managed to stay in it by putting your stop to zero and having the courage of your convictions, then the evidence is there. If you get into the turn, even if it was there on the way down, off you go. If you manage to catch that, you'd have probably taken it. And similar on the way up, you can see there, that's an old entry point of mine. If you get in there, then for a very, very long time, remember we're on 4 hours here. Okay, it was 36 days. But still staying in, you know, and even there, if you'd have read through, you wouldn't have, you'd have got out of that. But if you'd have gone through that and continued, you'd have got out of there and probably got back in there. That's another structure you need to be careful of, guys. When you get a pullback and you get a push out there, people often jump in long, and then you get the other side of the zigzag. So be careful with that one there as well, guys. It's another one that I point out almost, not daily, but often I point that out to my traders. Be careful going long here, guys. This could be about to come back down again. But nonetheless, if you did get in down there, trying to draw a straight line here. If that was your entry point, let's make it green. When did it break it again? Or when did it start to come down? There. I'm not suggesting you would have traded through that, guys, but it is possible that you could have traded through it. $539. That doesn't seem all that much, does it? For the length of time you've been in it. Contradicting myself now. 352 pips, pull back. And then another 450 pips. So there's a lot of money to be made in there, depending on your leverage and all the rest of it, guys. And on the way down, there's even more. On the way down, if you got in there and managed to ride through the thing, 700, 600 to there, 800 to there. There's a lot of pips in there, guys. Okay. Aussie CAD, same thing, guys. We're looking for that to push up, look for a correction. There's what we're looking to happen with the New Zealand. You see the similar structure there, guys. It's come down, got a double bottom there, off it went. Little ending diagonal, corrected down, now it's pushed on up. Now we're looking for it to continue on up. Aussie Swiss, let's just run through these now, guys. Aussie Swiss, well, because of the Swiss strengthening up, we're looking for this to drop out the bottom. Let's zoom in a little bit. I don't think there's no setup at the moment, but I'd be looking to trade that down. Aussie or Swiss yen. Now, this is a difficult one, guys. Short then long. Do you remember this one? I actually expect this just to come there and then go long again, guys. Came all the way back down to trend. Although it was difficult at that time to put a trend in. But we've now established one. I'm all the way down to here, gone up, dropped back down again. Ooh, what's going to happen next? Well, you can see I was looking for a pullback to get involved in it. I'm not sure I'd get involved in this at the minute, guys. You'd need a setup. And then it would require the yen to be much stronger than the Swiss, remembering that they're both will get a kick of a word slowdown. Ooh. I'm not entirely happy with this structure lines on this, guys, because it's been a bit itsy bitsy. I'll have to look at that again. CAD yen, well, this is one that you could happily get involved in. Last week it came down to there and was a bit unsure of it, and I said, well, listen, you're going to have to at least get a pullback before you can get into it. Short, That's what we've got. There was another opportunity there that I was looking for that we get in. There was the arrow from a couple of weeks ago, but now pushed down. I would say that you can just extend the arrow even further down. That's not a target. That's just me saying that I think this will continue down. But before it continues down, you're going to have to get a pullback. And then from there, look to trade it down. New Zealand yen, probably some. There we were looking for the pullback. It's come down to this trend line, which is a little bit dubious, but nonetheless, you're still looking for a pullback from that to look to trade it short. Let's just finish up here, guys. Been talking for a long time. New Zealand CAD. I was looking for this to falter there and come down. It's pushed on up. I would still say, well, we've got the interest rate decision coming out this week on the New Zealand. Let the interest rate happen, and depending on what happens, then make your choice. If the interest rate pulls the New Zealand down, which I suspect it will, you'll get a break, then you look for a setup, and then you look to trade it down. New Zealand Swiss. Possibly the same thing, guys. Strengthening the Swiss. I wasn't sure entirely what structure that was. I don't spend too much time on them. If I don't see it immediately, I don't worry about it. It's back to the 80-20 rule, guys. We've got loads of charts to go through. Don't waste your time sweating over a structure. If you don't know what it is, leave it alone. This is possibly some sort of triangle. Not convinced. Ending diagonal, maybe. If you were to take it, close it all up. Not a particularly good ending diagonal. Anyway, I suspect it's going to drop. Why? Because of the tide. The tide is that the Swiss tide's coming in and the New Zealand tide's potentially going out. Look for a drop on this. I don't know if that's a great setup, though. CAD Swiss. Same thing, guys. This is the same as the CAD yen. Doing the same thing, guys. Now, if you go back, I'm pretty sure I would have been calling these a few weeks ago. Although we did say a few weeks ago we were waiting for the initial push on both of them. Just to reiterate that, and it'll just take us 2 or 3 minutes. To reiterate that, the last time I would have been saying, listen, we have to wait for the breakout, but that's what we were looking for. And the same with the Swiss. We had a trend line initially there, and then I pushed it over to there because that broke that bottom. Initially, I thought that was the breakout. We'll get a correction, then it'll go. But that broke the bottom, so we said, well, then there's the trend. We've got to wait for the breakout. That's what we had now. I would say that these are at least going to go sideways, if not long. Probably long, guys. So New Zealand Swiss down, Swiss CAD on the way down again. You're going to have to wait for a pullback to get involved. If you get involved now, you'll get it away and then it'll come back up on you, guys. That's why so many people complain that the market's against them, because they establish the trend, they get involved, and then it does that. Wait for it to do that and then get involved. And then, yet again, there's what we were looking for there. We're looking for a breakdown. You can see where I put my lines, what I've been looking for, guys. Remember, I go through these every single morning for my traders, and I don't always clear everything off again. We were looking for that on Friday, and it just went again. It's the same system, guys. You've got to wait for the pullback. And when you get the pullback, if you're lucky, you'll get a nice setup on it. And then you trade it on down again. We've already looked at the indexes, guys. Aussie yen. Why is that away down there? Let's have a quick look at it in case. Oh, look at that one. Did we already? I don't think we already looked at this one. This was my arrow from a while back where it said, listen, this is going to drop. Unfortunately, guys, the way these things happen is that you have a trend line on there. And this is why trading is difficult for everyone. You have a trend line on there. You're looking, your target's down there somewhere. You're looking for it to break, you're looking for a setup, and then you're looking for it to go. This is a 4-hour time scale. You could very easily have got into that as a push down. You'll have been stopped out, and then off you go again, and you end up missing it. But that's part of trading, guys. It doesn't always do that. That's the danger of not waiting for the pullback. Let me clean that up and show you it, and then we'll finish up here. I know that 95% of you won't be listening, but those of you that stuck at it, you'll maybe learn something, guys. Let's go down to the 1-hour time scale in this and have a closer look at it. That's not something to get involved in. Even though it's coming down, very, very difficult. It's not moving impulsively, guys. We need things to move impulsively. This, as a whole, has been horrible. Even that, there was no setup in there for going short. Potentially that was a setup, but given how it had moved before that, you wouldn't want to be betting your life that that wasn't going to do exactly the same thing as it had done before. And that's not really something you want to be trading. Once it starts moving like that, then fantastic. But often once it's moved like that, you've missed it. So you've got to wait for the next pullback. It's got to be the right sort of pullback. And then you hope that the next move is going to be like that. If it isn't, you get your stops tight. You take your hit if you get it wrong. You take your zero if it comes back and bites you. And you protect your capital so that the next time something sets up, you've got the capital to get involved in it, guys. This particular pair doesn't move or hasn't been moving in a particularly nice way recently. That was okay for that long. That was difficult to get involved in. That was difficult to get involved in. You know, when you look at these on the 4 hours, the guys, or the daily time scale, very, very easy to go, oh, you could have got in there, you could have done this, you could have done the other. But when you get down to a trading time scale, it's a lot more difficult, and that's where we have to look at it every single day down in the 1 hour to 15-minute time scale, looking for your setups. Okay, guys, hopefully you will have enjoyed this. If you have, will you please give me a like and maybe even share it with some people, just to get the momentum going, guys. I'm not doing this for the good of my health. I'm doing this to get the message out to as many people as possible. Okay, bye for now. Speak to you all next week.